Chapter 3 Audit Reports. Discussion questions. Number 1. List the 7 parts of a standard unqualified audit report and explain the meaning of each part. The unqualified audit report consists of: Number 1. Report title. The auditing standards require that the report to be titled and that the title includes the word independent. So, the report title must include the word independent. Number 2. Audit report address. The report is usually addressed to the company, its stockholders, or the board of directors. Number 3. The introductory paragraph. The introductory paragraph is the first paragraph of the report, which does 3 things. First, it makes a simple statement that the CPA firm has done an audit. Second, it lists the financial statements that were audited, including the balance sheet dates and the accounting periods for the income statement and statement of cash flows. Third, it states that the statements are the responsibility of the management and that the auditor's responsibility is to express an opinion on the statements based on an audit. So, in the introductory paragraph, 3 things will be mentioned. First, a simple statement that the CPA firm has done an audit. Second, the financial statements that were audited. Third, the responsibility of the management and the auditor's responsibility. Number 4. Scope paragraph. The auditor in this section states the choosing criteria, the auditing standards used, and states that the audit is designed to obtain reasonable assurance that the statements are free of material misstatements, and states the auditor's responsibility. Number 5. Opinion paragraph. The opinion paragraph is the final paragraph in the standard audit report, which states the auditor's conclusions based on the results of the audit. The auditor's conclusions is stated as an opinion, rather than as a statement of absolute fact or guarantee. Name of the CPA firm. The name identifies the CPA firm or practitioner who performed the audit. The audit report date. The audit report date is the one on which the auditor completed the auditing procedures in the field. Question number 2. What are the purposes of the scope paragraph in the auditor's report? And identify the most important information included in the scope paragraph. The purposes of the scope paragraph in the auditor's report are to inform the financial statement users that the audit was conducted in accordance with the generally accepted auditing standards, and whether the audit provides a reasonable basis for an opinion. The information in the scope paragraph includes the following. Number 1. The auditor followed generally accepted auditing standards. Number 2. The audit is designed to obtain reasonable assurance about whether the statements are free of material misstatements. Number 3. Discussion of the audit evidence accumulated. Number 4. Statement that the auditor believes that the evidence accumulated was appropriate for the circumstances to express the opinion presented. Question number 3. What are the purposes of the opinion paragraph in the auditor's report and identify the most important information included in the opinion paragraph. The purposes of the opinion paragraph is to state the auditor's conclusions based upon the results of the audit evidence. The most important information in the opinion paragraph includes: number 1, the word "in our opinion," which indicates that the conclusions are based on professional judgment and not a guarantee. Number 2, a restatement of the financial statements that have been audited and the dates thereof, or a reference to the introductory paragraph. Number 3, a statement about whether the financial statements were presented fairly and in accordance with the generally accepted accounting principles. Question number 4. What 5 circumstances are required for a standard unqualified audit report to be issued? There are 5 circumstances which are required in order to issue standard unqualified audit report. Number 1, all statements, which are balance sheet, income statement, statement of returned earnings, and statement of cash flows, are included in the financial statements. Number 2, the 3 general standards have been followed in all respects on the engagement. So, what are the 3 general standards? The 3 general standards are: number 1, the auditor must have both adequate training and proficiency. Second, the auditor must be independent in both fact and appearance. Third, the exercise of the due professional care in performing the auditing tasks. Number 3, sufficient evidence has been accumulated, and the auditor has conducted the engagement in a manner that enables him or her to conclude that the 3 standards of field work have been met. What are the 3 standards of field work? The 3 standards of field work are related to how the auditor actually do his job, such as his work is adequately planned, he gained an understanding of the client, the evidence gathered during the audit is appropriate and sufficient to evaluate the management's assertions on the financial statements. Number 4, the financial statements are presented in accordance with generally accepted accounting principles. This also means that adequate disclosures have been included in the footnotes and other parts of the financial statements. There are no circumstances requiring the addition of an explanatory paragraph or modification of the wording of the report. So, after these 5 circumstances, the auditor can issue unqualified audit report. Question number 5. List the 3 conditions that require a departure from an unqualified opinion. The 3 conditions requiring a departure from an unqualified opinion are: information misstatement, such as underestimating bad debt reserves, mismatch between inventory counts and financial records, or not including certain lease obligations in property debt. However, the rest of were not materially misstated. Number 2, failure to follow GAAP, that doesn't affect the auditor's conclusion that the overall financial statements are fairly stated. Number 3, scope limitation. Qualified report is also issued when the scope of the audit has been partially restricted, but the rest of the financial statement assertions were audited to the auditor's satisfaction. Thus, the auditor has knowledge that the statements of financial position, results of operations, and cash flows are fairly stated. Question number 6. Distinguish between a qualified opinion, an adverse opinion, and a disclaimer of opinion. Number 1. A qualified opinion states that there has been either a limitation on the scope of the audit or a departure from GAAP in the financial statements, but that the auditor believes that the overall financial statements are fairly presented. Circumstances that require qualifications of auditor's opinion. Number 1, as we mentioned before, information misstatement, such as underestimating bad debt reserves, mismatch between inventory accounts and financial records, or not including certain lease obligations in property debt. However, the rest of were no materially misstated. Number 2, failure to follow GAAP, but this failure don't affect the auditor's conclusion that the overall financial statements are fairly stated. Number 3, scope limitation. Qualified report is also issued when the scope of the audit has been partially restricted, but the rest of the financial statement assertions were audited to the auditor's satisfaction. In the qualified opinion, especially in the opinion paragraph, the term except for is included in the opinion paragraph, and the circumstances requiring to qualify the auditor's opinion is explained thereafter. So, in the opinion paragraph, when the auditor issue a qualified opinion, we will include the term except for. Then after this term, the circumstances requiring to qualify the auditor's opinion is explained. The term except for, which was mentioned in the opinion paragraph when the auditor qualified his opinion, is intended to convey to users that the external auditor is satisfied that the overall financial statements are correctly stated in accordance with GAAP or IFRS, with the exception of specific aspects of them, which will be mentioned after the term except for. The second type of opinion is disclaimer of opinion. There are certain circumstances which will lead the auditor to disclaim his opinion. Number 1, scope limitation. Disclaimer of opinion is issued when the client's management imposes severe restrictions that prevent the auditor from accumulating sufficient evidence. Therefore, there is a severe scope limitation. The auditor doesn't receive all information and explanations that he deems necessary for the completion of the audit. Hence, the auditor is unable to perform complete audit with satisfactory results due to this scope limitation. One concern is the possibility that the management is trying to prevent the auditor from detecting the presence of misstated information. The auditor doesn't have knowledge, therefore he cannot express an opinion on the financial statement, so he will disclaim his opinion. The management may contribute to the scope of limitation by refusing to provide all information required by the auditor. For example, the client's management doesn't allow the external auditor to contact the client to verify material accounts receivable balances. Second example, client's management doesn't allow the external auditor to undertake physical inventory balances in the financial records, or through distractions of accounting records, also limits the auditor's capability to deliver judgment about whether the financial statements are free of material misstatements. So he also will disclaim his opinion. The second circumstance which will lead the auditor to disclaim his opinion is the lack of the auditor's independence. The external auditor may also disclaim his opinion when there are circumstances that compromise his or her independence. For example, number 1, the auditor prepares financial statements for the auditee. Number 2, the auditor is assisting in selling the client's company. Number 3, the company has been audited by the same auditor for over 10 years. So, the opinion paragraph includes the following statements. When the auditor disclaims his opinion, the opinion paragraph will include the following statements. We didn't satisfy ourselves as to whether financial statements are fairly stated. The scope of our work wasn't sufficient to express our opinion. So, we are not expressing an opinion on the financial statements under audit. Number 3, adverse opinion. The circumstances which will lead the auditor to issue adverse opinion are as follows. Number 1, information misstatement. An adverse opinion is issued when there is material misstatement in the financial statements that is likely mislead the user's decision-making process. Failure to follow GAAP. The financial statements haven't been prepared in accordance with GAAP or IFRS, and the accounting standards violations are so widespread that the auditor cannot say that the financial statements present fairly in accordance with GAAP. Examples of the circumstances that require issuance of adverse report. Number 1, the client is using replacement costs to measure fixed assets rather than using historical costs, or value the inventory using fair value, which is selling price, rather than the historical cost. The client failed to consolidate all its operations, which means to issue one set of financial statements reporting for the parent company and all subsidiaries. The client didn't record a material account, such as revenue, properly, excluding a liability from the balance sheet that, if recorded, would significantly increase accounts payable and decrease the net income. The opinion paragraph in the adverse opinion states that the financial statements do not present fairly in all material respects the financial position of the firm and its results of operations and cash flows in conformity with GAAP. Question number 7. Discuss the materiality assessment as it used in audit reporting. Assessing materiality in respect to information misstatement and GAAP violation will be as follows. A qualified report is issued when the effect of information misstatement or GAAP violation is material. However, the condition is not severe and doesn't affect the auditor's conclusion that the financial statements are fairly stated. While the adverse report is issued when the effect of information misstatement or GAAP departure is highly material and the condition is severe, so that the overall financial statements are misleading. While with respect to scope limitation, the qualified report is issued when the scope restriction is not severe, so the auditor has knowledge that the financial statements are fairly stated. While disclaimer report is issued when the scope restriction is severe, so that the auditor doesn't have knowledge about whether the financial statements are fairly stated. Question number 8. What conditions will affect the auditor's determination of materiality? Number 1. Quantitative factors, such as dollar magnitude of the effects. Number 2. Qualitative factors. Number 1. The significance of the items to the entity. For example, significance of inventories to a manufacturing company will be different from its significance to a service sector company which provides services. The persuasiveness of the misstatement, whether it affects the amount and presentation of numerous financial statement items.